So something strange happened this weekend, sitting around the family room with the family, obviously, and I open up my phone and I'm looking at Robinhood and I'm sitting here kind of scrolling along. I hit the Robinhood app just to see what's going on, and immediately I get something other than what I typically see, which is my account balance. And when you scroll through, you see kind of what you got open positions, etc. I saw this. The first thing that popped up, I had to put all this together in one chart so you could see it. So let's blow this up here real quick. And so you've got, first thing it said was gold month. The second vault is open. All right. So this was an offer for gold members. And so I didn't know what it was. I went, let me just see, reveal the offer. When I clicked on reveal offer, it popped up and said, get a 2% bonus on account transfers. Right. Here's an interesting thing. No bonus limit. Transfer in an account. This is not just deposit cash. This is transfer an account from a different brokerage firm over to Robinhood. They're going to add 2% to the account balance, what you have in cash. Only takes a few minutes. They cover the transfer fee too, up to $75 when you transfer in $7,500 or more. When you click on Get Started, or more importantly, I clicked on Learn More, and this popped up. How to keep the 2% bonus. That's kind of important. So stick with Robinhood. You got to be a gold member for a year. That means you got to remain a gold member. So you can become a gold member, transfer the account in, and remain a gold member for a year. You got to maintain the account balance that's equal to the transfer value for 5 years. The longer you hold, the more bonus you keep. And then, of course, if you need cash, they also have a grace period where you can pull some cash out as long as you put it back in within the next 2 months. All right? This is interesting. But you know what? It got me thinking about two things. First of all, number one, I think this is a great PSA. And my PSA for you right now is that if you got some cash sitting around in an account, in another account, it's not earning money, perhaps this might help you get some free cash. 2% on cash is just sitting around. I believe this offer ends on March 31st. So check this out. That's my PSA announcement for you. Now I go into my trading, put my trading cap on. This is an unlimited funding with a 2% bonus. They didn't offer this before that I know of. So why? And why are they ending it on March 31st? And it got me thinking that perhaps they're concerned about Q1 earnings. You know, when the markets drop, the average investor stops trading. When markets are going up, that greed kicks in. I want more, I want more, I want more. But when the markets drop, a lot of these deer tend to freeze. And I believe that their trading revenues might actually be down for the month, right? And so what are they thinking? What kind of metric can we give Wall Street that will make them happy? Let's show the account value increases. I believe that's why they put this out there. So let's take a look at Robinhood and see if there's actually something tradable besides news. First of all, look at the chart. Robinhood's dropped 40% in the last 30 days, from a high of above 65 down to a low right around 35. That's a huge drop to happen between mid-February and mid-March. Continue on. I decided I'm going to put all the guns out there. So I went ahead and took Robinhood and I put it in something I called my grid scan. My grid scan looks at the money calendar. You all should know what the money calendar is. That's my seasonal strategy scan. But I also looked at things like trends. I looked at volatility. I looked at long-term. I looked at short-term. I looked at my contrarian signals. I threw everything at this thing that I could find to look for a buying opportunity. This is what I got. The input stock symbol did not satisfy filters. You know what that means? In computer terminology, it means I didn't get a trade. So then I thought, well, what about earnings? So I went to look at earnings patterns before and after. This is a scan on Robinhood before earnings, when it shows me that in the last 4 quarters, the stock has moved higher, up. The week prior to earnings, 3 out of the last 4 quarters, we've seen the stock move higher to a tune of around 5.85%. That's in a week. What about after earnings? That number jumps even more. 13.5%, the stock actually moves higher the week after earnings. This is some big information. So all of a sudden I'm excited. but you got to really put the trade on a week before earnings. And also there's a couple of other things you got to look at too. If you're going to buy the stock, you'd buy it a week before earnings, you'd sell it a week after earnings if you're going to follow this particular pattern. If you're an option trader, you got to look at volatility. That pattern that happens before earnings, you want to be an option buyer of time premium. That pattern that happens after earnings, you want to be a seller of option premium. If you're an option trader, you should know the difference between buying into rising volatility and selling out of high volatility. Now, as far as my projection, it kind of ends like this. After everything I've looked at, there's no buying patterns today. The stock's oversold, is due for a bounce, but do we buy something just because everyone thinks it's going to go higher or lower? No. I need rules-based strategies. The only rules-based strategy that I could find was earnings that suggests that before and after the report is typically bullish. Here's the problem. That trading signal really doesn't start until around mid-May, so I can't just go buying it right now. We're still 59 days away from earnings. So, in the end, I gave you a great way to find a way to put 2% to your account by utilizing Robinhood itself, although I'm not suggesting or endorsing the Robinhood, and I don't get paid. There's no special link you have to click on to get this. Just go to Robinhood.com yourself and find it yourself. But outside of that, sometimes it's best that we don't guess where a market's going to go. We sit back and we let the pattern come to us.